Welcome to the Allied Angle Client Voices Edition. I'm Amber Guthrie with Allied Solutions. Lending is at the heart of every credit union, but right now it feels more like a balancing act. Charge-offs are rising, members need flexibility, and lenders are being asked to support borrowers without putting their portfolio at risk. In this episode, we'll hear how leaders are navigating these pressures and making changes to products, processes, and collections to lend with confidence. I sat down with Annie Wilkinson, COO of Dade County Federal Credit Union, Vince Castelli, Underwriting Director of Consumers Credit Union, and Bruce Brumfield, President and CEO of Founders Credit Union. Together, they share how lending is evolving and how partnerships with Allied are making a difference when risks are high and the stakes are even higher. What changes have you implemented to your rate offerings and underwriting to maintain flexibility for you and the borrower?
We are currently monitoring the rates in our market. Mm-hmm. That's one of the things that we focus on a weekly basis. We make sure that we're offering the right rate for the right product. Charge-offs they're always going to be there, right? And every credit union is like our credit union. We want to minimize the charge-offs. We do try to steer the members in the right direction, and making sure that they have the ability to pay is important.
It's really keeping that member first mindset.
That is correct.
To look at an analysis of cost of funds and be able to make shifts where needed, always keeping the member in mind and starting with more of a relationship lending approach.
Lending has always been the machine that's driven our credit union. We run a loan-to-share ratio from 93 to 106%. We're constantly looking at our members. We're constantly running their FICO score to make sure our price ranges are correct. But then you do a lot of information from the industry to see what other people in your market are charging, but not just your market, because now you're competing nationwide against folks, and you're making sure your prices are where they need to be. And if you can't offer it, you better understand why you can't and how you're going to change it.
With rising charge-offs, are you rethinking product structures like consolidation loans or HELOCs to better align with member needs in today's risk environment?
So you always have to make adjustments as a full spectrum lender and do what's best for the member. So that's certainly been a topic that we look at and to make it most meaningful for our members.
Our charge-off ratio, if you look at our credit union historically, our charge-off ratio is going to be a little above average, primarily because we've got 30 to 35% of our loans in people that have substandard credit. We've just developed a method of how to manage that. You don't treat a C credit like you do an A. You better get on those delinquencies quick. You bring them in. What kind of problems are you having? Can we help you? So we're constantly looking at that, but we're not throttling back on our risk tolerance. We're in the risk business, and if we're not meeting those needs of the people that need the help the most, then I'm not sure we're fulfilling our mission of what credit unions were established to do in the first place.
Because it's people helping people, not people helping people with good credit.
Exactly.
We are always training our team members, especially when they're up requesting like an unsecured loan, right? And they want to do some changes or improvements to their home. And we see that they have a home. Let's move them into a home equity product where it not only benefits them rate-wise, right? Because the rate is always lower. It also benefits the credit union because we have that collateral dependent loan that we have some equity in there. And it's just a win-win for all of us.
How are you balancing borrower support, such as education or community programs, with the need to protect assets and manage collections? And how does that impact your ability to lend confidently?
We spend a lot of time on financial literacy, and we have a staff that's dedicated to going out in our community and doing financial literacy. And we tailor that to the group we're in front of. We believe in investing in members to help them understand establishing a firm financial foundation that you can build upon is critical in today's society. The more they understand that, and the more you give them to understand how that FICO score not only is important for your credit and your rate you receive at the credit union, but it's going to dictate so many other things in your life. We think that builds upon a foundation, once again, that will help them make great decisions going forward. And we don't ever see throttling back. We invest a lot in collections, once again, because of the membership that we serve. but we believe in being out front on that. And we think that education is the key to finding financial success.
We have a three-prong approach. We have our Gen U, we have our business development team that goes out to all of the organizations in the community. Our Gen U focuses on education with the youth, and we focus on that heavily. And then we have our community engagement program that focuses on small businesses and their needs.
Do you have a favorite of your programs?
I love them all. But if I had to have a
having
favorite,
children.
if I had to have a favorite, it's the kids, right? You watching the kids learn financial education is really, really rewarding because they learn and they're excited to learn.
So reaching out to the community, having an outreach program, educating all of the community members as financial wellness is a really important step in advocating for financial wellness, but also by educating, you can prevent a lot of, what some of these concerns are in the marketplace today.
So your financial wellness or education, are those directed towards specific age groups? Or for instance, do you have a teenage program versus, something for potential home buyers and those that are starting families?
Yeah, based on any type of life event, I would say that financial wellness doesn't have a specific age group. I think it fosters for all age groups. So that would be from, someone entering the job force or about to enter college or even, saving for a goal all the way through retirement.
So meets you where you are in life.
Absolutely.
How are you balancing the pressure to lend with the responsibility to protect your portfolio in this environment?
That is a ever-evolving challenge, right? Because you do have those members that are credit challenged. You have members that usually have some problems that they need money right now. And we balance that through many avenues, such as providing them products that are protecting the asset of the credit union, as well as protecting them rate-wise.
We love lending. That's just something that we've always done. Our model is built around lending. Lending drives everything else we do at our credit union. If our lending demand is strong, then we understand we've got to support it through other ways. If it's not strong, then some other ways are going to get cut back a little bit. So once again, we spend a lot of time and energy on making sure we have those products that are important to the members at the point which they need them. But you've got to understand the concerns of the member and how do you address those concerns the best that you can. A lot of it, is outside of our control. What's going to happen with rates? We have very little control over that. We just got to develop, design, and present products that will address that rate concern, whether that rate's going to go up or go down to our members.
Have you seen a lot of popularity with that?
Absolutely.
Making a shift of analysis within, looking at detailed reports, any type of historical data, keeping a pulse on where you can make shifts where needed. Again, all doing it with as a relationship lender and keeping the members in mind first.
How has Allied supported your lending or collection strategy, especially in high risk or rapidly changing areas?
Allied's been great, supporting a lot of the increase of any type of challenges from their products, technologies, great innovators and great partners.
Allied has been a great partner for us, having that client development manager on site when we're onboarding employees and training them of all the products and going through the different scenarios of when to use the products is important. But not only that client development manager does come out periodically and sits with our LSRs, our loan funders, to ensure that they understand the product. If they're having challenges on how to present the product, that client is there with us to help us better improve the performance of our employees and protect our members.
So it's really a game changer to have that support.
Yes, it is. And through the collection channel, it's been a game changer, right? Because of all the different challenges that we have in collections, such as repos, right? That's the biggest thing. And they're there for us, whether it's skip tracing, CPI, it's a game changer for us. And we really enjoy that.
The biggest area they've helped with that is our CPI coverage. And, we just could not do the lending especially on the consumer side that we do without having a partner such as Allied. The support that they give, our lenders, helping them understand the product, the challenges that members are facing, how to address those challenges. You feel like you have a partner. You're not in this thing alone. And you know that they're constantly pushing, evolving, and improving the products that you offer your member.